Swing Edge Pro, the intelligence feed for decisive traders.
All right, for today's tactical briefing, we are going deep on Supermicrocomputer Incorporated, that's ticker SMCI. Our mission is pretty simple: analyze the intelligence and really pinpoint its strategic edge in the market right now. So the mission is clear, it's focused. We're looking at SMCI as a potential swing trade, and our goal is to figure out if there's a real, tangible strategic advantage here, based on some very strict operational criteria. Okay, so here's the core idea driving this whole thing. Our intelligence suggests SMCI is shaping up to be a potential triple bottom swing candidate. And what's more, it's sitting right at a make or break support level. So let's dig into the evidence, shall we? First up, we're going to assess the target's strengths. This is where we look at all the positive signs. You know, the data points that actually line up with and support that core thesis we just mentioned. And right off the bat, the top-line assessment looks pretty solid. SMCI meets 7 out of our 9 key swing criteria. Now, that is a high rate of compliance, and it's something that definitely gets our attention. So let's just quickly run through the checklist here. We've got positive confirmation on the technical setup, its growth, the ownership structure, and the short interest. The 2 failures, and we'll definitely get into these later, are in its balance sheet and its float size. But first, let's break down all these positives. Now, what's really interesting here is the technical posture. The stock is trading just over 8% above its 52-week low, which is establishing a pretty powerful support base. You can see 3 distinct bottoms at different price points, and that's forming what could be a real launchpad. This is exactly the kind of classic technical pattern that traders get excited about. And this chart really shows you the engine that's driving the company. In our analysis, we're looking for a bare minimum of 20% year-over-year revenue growth. That's a sign of a healthy, expanding business. Well, SMCI isn't just meeting that target, it's absolutely shattering it with 46.59% growth. That tells us there's some real fundamental power here, not just a technical story. All right, now let's talk about ownership, because that tells you a lot about conviction. With over 56% held by institutions, we're talking big names like Vanguard and BlackRock, and a pretty significant 16.5% held by insiders themselves. It means both the big money and the management team are heavily invested. That alignment is a huge positive sign. But, a thorough briefing means we have to look at the negatives too. So now we're going to pivot to the target structural vulnerabilities, focusing on those 2 criteria where SMCI just didn't pass the test. And here is the first big red flag: the balance sheet. With total debt clocking in at $5.17 billion, that actually exceeds its cash reserves of $4.21 billion. So the company fails our cash-to-debt ratio check. That level of debt, you have to admit, introduces some significant financial risk. The second vulnerability is more of a structural one. The public float is nearly 500 million shares. I mean, think about that. A float that large requires a massive influx of volume to move the price in any significant way, which makes it a much slower, much heavier stock to trade. Okay, so let's zoom out a bit and look at the situational intelligence. A stock doesn't exist in a vacuum, right? We need to assess the market sentiment, what analysts are saying, and any recent news that could actually influence its trajectory. Now, this is a really critical piece of intel. The short interest stands at 19.4% of the float. You should think of this as a kind of pressure gauge. A high short interest means a huge number of traders are betting against the stock, which ironically creates the potential for a really powerful short squeeze. But on the flip side of all those bets against the stock, you've got Wall Street analysts. Rosenblatt recently came out and reaffirmed their buy rating with a $55 price target. Now, that is well above the average analyst target of around $46, and it shows some strong bullish conviction from a key player in the market. In the recent news, it's been like a powerful tailwind pushing this stock forward. SMCI delivered a total blowout in the second quarter. Revenue was up a staggering 123% year over year. They've raised their guidance, all driven by this insane demand for AI infrastructure. And even the options market is flashing a bullish signal with a 2-to-1 call-to-put ratio. Now, we also have to be clear about the other operational risks that the source material points out. Alongside the debt and the huge float size, there are some lingering accounting concerns and the challenge of ongoing margin compression. Any potential investor has to factor these into their assessment. Okay, so let's put all the pieces together. We've assessed the strengths, we've looked at the vulnerabilities, and we've considered the external factors. Now it's time to formulate the final assessment and really identify that strategic edge. So here's the final breakdown, the bottom line. You've got a strong, clear technical setup, a really powerful AI-driven growth narrative that's backed by actual earnings, and then you have the explosive potential of a high short interest. But all of that is being weighed against some key structural risks, a leveraged balance sheet, and a large, heavy float. And that brings us to the one crucial question that everything boils down to. This is the strategic edge. You've got a powerful AI tailwind and a bullish technical chart on one side, and it's facing off against fundamental balance sheet risk on the other. The outcome of that conflict, well, that's what's going to determine the next major move for SMCI.
Swing Edge Pro, the intelligence feed for decisive traders.